Hey everybody, today we wanted to talk about one of the toughest industries out there, that is the airline industry, and we wanted to hone in on JetBlue stock specifically, what's going on there right now, because there's a lot of news of what's going on in JetBlue, and show you by the numbers what's actually happening that is so negative to the stock. So let's start here with the recent stock price. This is the last 6 months stock price. You can see it was hovering around $7, some bad news and earnings to the $6 range, all the way down to 480 the other day. And this is basically on a financing announcement that they need more capital. And we'll get into why they need more capital essentially. Zooming out just a little bit further to the long-term chart, you can see that over the last 5 years, the stock's been even more negative than that, right? There's just no return for the equity holder. And in order to know why, we have to look at the past and the future and how those two things have changed. All right, let's take a look here at 2017. This is one of the heydays of JetBlue when things are going well right here. Revenue about $7 billion. That translated into a positive EBITDA of about $1.4 billion right here, a slightly positive net income. But I want to point out one of the pitfalls of this industry. So you can make a positive net income in this industry, but the problem is there is a very large CapEx bill all the time. This is buying new airplanes, buying new things for airplanes, terminals, things like that, right? And they struggle to make a really strong profit margin, and then they have to give it all back by reinvesting here. One more thing I wanted to point out about 2017 here is the balance sheet. Remember this number, 1.2 billion in debt against $700 million in cash. That is 500 million in net debt, compares to $1.3 billion in EBITDA. Very low leverage ratio, very solid. That is going to change though in the future. All right, let's take a look at the worst year the airline industry ever had, and that would be 2020 during COVID. Remember that $7 billion in revenue they were making in 2017? That number went down to $3 billion. What happened then? Very large negative numbers below it. Negative EBITDA, negative net income. They still spent money on airplanes of $800 million, and the free cash flow went very negative. Where is that cash going to come from? Where are they going to spend it? They have to take on debt, and they did. The 1.1 billion in debt in 2017 became $5.7 billion. Now, some of that cash still sat on the balance sheet by the end of 2020, but they ended up with a very high leverage package and a lot of negative free cash flow that was sucking away the cash, essentially. So then let's fast forward to modern day and why this stock is all the way down at 480. You have a net balance sheet of negative 4.5 billion or 4.5 billion in total debt, right? Now the revenue is higher than 2017, 9.3 billion, but the EBITDA is still very, very, very small. The net income is small. We're still spending $1.6 billion on airplanes at the end of the day. So there's a huge negative free cash flow number here. And there's a huge leverage number of, so if you compare $4.5 billion in net debt to about 400 million in EBITDA, you have 11 to 12x leverage ratio, right? So they're barely making EBITDA, paying a lot of interest, that's the I in EBITDA here in net income, and spending a ton of money in CapEx, which is blowing through cash like crazy. This is why JetBlue wanted to merge with Spirit Airlines so that they could kind of fix these problems together, right? This is why they went back to the capital markets to borrow more money, right? And that's what makes the equity owners like us, it makes it a very scary investment. Warren Buffett has sworn these companies off entirely. He does not want to buy airlines ever, and this is why. They're very expensive to run, they have very tiny profit margins, and then they have to go buy all sorts of CapEx with it. So we avoid them here. We wanted you to be aware of all the pitfalls of these businesses and why they're good to avoid, essentially. Thanks for watching. We appreciate it. Hit us on the socials with any questions or any thoughts you have, and we appreciate you.